Hello and welcome to India Market Open. It's bright and sunny in Mumbai. The implied Nifty is indicating to a flat start. Global cues are okay, but in another failed attempt by Hindenburg guys this weekend to maliciously attack India and through none other than the highest share of the SEBI. I'm calling it failed because I think the conspirators have gone all out, but so has the country. It's taken a united stand.
Yeah, and you know, as it should, per se, part one, and part two, just the point-by-point rebuttal that have been made by various people on social media, on our show yesterday evening, etc., with regards to most of the points that have been made in the letter. Now, you know, it's very difficult, you know, I must say, for people to give a point-by-point rebuttal on such a large letter in a matter of 24 hours, but I think some of the points that have been called out were downright silly, to be honest.
Yeah.
And I think that's why the markets are probably not showing any kind of a reaction at all.
For good reason.
Good reason.
So I think what became very clear, and if you look at the SEBI statement, there were two sets of statements from Madhvi and Dhaval Butch in their personal capacity, but the SEBI statement at the end of the evening becomes very important, because if you see the second paragraph of that statement, it says that investors should keep in mind that Hindenburg has taken short positions.
Exactly.
Basically, this is not out of some goodwill to
Save
highlight what is happening in
or
the Indian
investors
market, or this is they're making money, they've taken short positions, and then they're going ahead and trying to create a situation where those short positions turn profitable. That's essentially what is happening.
That would be very interesting today, right? Because if you have the system at whole in support of what the country stands for, what our governance stands for, what regulation stands for, because this is not just any other person. This is the highest share of the most important regulatory body in any country, right? Yeah. What would be interesting to see is, of course, and this is ex-school or ex-university, like people call it, that there are talks that there have been puts being bought on MSCI India. Yeah. If that is true by any case or by any imagination, I would imagine all those hands will do whatever it takes to get these guys out, and there could potentially be a big short squeeze coming our way.
You know, at the end of the day, and this is the beauty of markets and investors and the collective wisdom, which Niraj keeps calling Mr. Market, is that people, when they are putting in an investment, don't look at their ideologies, their politics, what they feel about the company. They look at the facts. And today, we'll wait and see what Indian investors do. What is also really unfair is that in the middle of all of this, whatever conspiracies they may be, who gets squeezed? It is the Indian retail investor. So let's.
So no reaction would be the biggest reaction.
So my limited view out here is that there might not be a reaction. So, you know, most people have said that they've been waiting for reasons for the markets to come off, stocks to become better valued so that they can buy, because some of the results have frankly been fantastic. We'll talk about some of them today as well.
Yeah.
So most people are waiting for a dip. So in some sense, the slightly mischievous line was, if this brings a reaction, I'll be very happy, because there are a lot of stocks I want to buy. I'm sitting on the cash, I want to buy. But they admitted that just the nature of the allegations made doesn't seem like it will bring about any kind of a reaction, despite the fact that it's an attack against somebody who stands for integrity, right? And it's an attack against her in a personal capacity, right? So therefore, they say that despite the nature of the attack, they do not believe that the investing fraternity will get nervous.
And it's almost emotional, right? So forget market participants, forget industry. Even the common man who's privy to this and is up to speed with it. So of course, on Saturday night, I was out and everyone was sympathizing. They're like, oh, this is not right. So without even knowing the complete picture, which of course rolled out on Sunday, the fact remains is that we stand united as a country, and I think that's what's commendable about us.
So apart from sentiment and emotion, we need to get into what the facts say, and that's very, very important, because we're not just making claims, right? When we're saying that the Hindenburg hit job has been completely punctured, what is the reason for that? So Vishwanath Nair joins in, and he and I were covering the story yesterday as well. Vishy, let me just start with the SEBI statement, which came in, and that was the official statement, right? So that's important. And SEBI, and I know Madhvi Puri Butch is the chairperson, but SEBI as an organization has come out and essentially said that we have all the disclosures which were required, isn't it?
So on Sunday, Dhaval and Madhvipuri Butch issued two separate statements. Well, the first one was a briefer statement sort of refuting the allegations made by Hindenburg Research in their latest note to investors. And the second one was far more detailed with information about both of their professional careers, how they have progressed over time, their investments, and whether there were adequate disclosures that were being made by both Dhaval as well as Madhvipuri Butch. And this information essentially is intended to refute any of the allegations. Now, one of the statements that probably popped out, which was at the end of the statement, was that Hindenburg Research is yet to respond to SEBI's show cause notice, which was issued in January, which was issued in June, apologies, where this details were sought from Hindenburg Research about how they proceeded with the short sell against the Adani Group when they issued their short sell note in January of 2023. Now, remember that SEBI at that point in time had issued a show cause notice in June where they had claimed that Hindenburg Research had colluded with a bunch of other market participants, specifically the K India Opportunities Fund, which is a Kotak Mahindra owned fund, as well as Kingdon Capital, which is owned by short seller and hedge fund manager Mark Kingdon. So through this collusion, they had made about 4 million worth of earnings by shorting Adani Group shares. I'm specifically talking about Hindenburg Research. What Hindenburg has raised are multiple issues of potential conflict of interest. However, they have not provided clear details of any direct linkages between Madhvipuri Butch as well as the Adani Group in their past dealings.
Okay, so this was the statement coming in from SEBI as well. So now we've been talking about for the last few minutes about why this latest hit job attempt by Hindenburg hasn't really worked. And why am I saying that? Why are we saying that? So let me just put that into the facts and two sets of statements, one from Madhvi and Dhaval Butch and the other from 360 WAM, which was then IIFL, which ran the fund that Madhvi and Dhaval Butch invested into. So look at those two statements together and this gives you a clear picture. They puncture the claims completely. Why is that? First of all, this couple, when they invested in the IPE Plus fund, and that's the core contention, right? That this was a fund that they invested in, which Hindenburg claims has some kind of links to their initial allegations against Adani. But those investments were in 2015, 2 years before Madhvi had anything to do with SEBI. So, number one, that timeline doesn't fit. Second point is that this fund has more than 90% plus of its allocations in debt. Between Madhvi and Dhaval Butch, they had 1.5% of the fund. So, in no way could they have any say in where this fund invested. And that again is the crux of the allegation. So, I'm taking Hindenburg's own allegations and displaying how, frankly, they're making no sense. Which is why there's nothing really to back their claim that there is a link between Madhvi's actions as an investor in 2015 and what she's done as SEBI chair today. If there was any benefit that they're claiming came to Madhvi and Dhaval Butch through this fund, it clearly didn't, because when they sold it, they didn't even make any profits from it. So really, where is that beneficial link at all? Hindenburg is also making it clear, and if you look at their statement, they make it clear with their standard disclosure that they have taken short positions. They say anyone reading this should assume that we have taken short positions on the companies that we're talking about. That's their standard disclosure. This is something SEBI points out as well. So they've made it very clear that they're in this to take short positions and make money. And remember, SEBI has backed Madhvi Butch, says all disclosures and compliances were made. Her consulting firms, now this is the important part, and if anyone has a view on this, the only question mark, if any, that could be asked is why did a SEBI chairperson have consulting firms? They came out and they declared yesterday that those are completely dormant. So she shut all her activities as a private citizen, and if anyone has seen her career, she's been doing this for 30 odd years, has worked with some of the largest private entities in her own capacity.
Exactly.
And we were having this conversation yesterday, Niraj and Samina, that if you want very qualified private professionals to come in and take positions like SEBI chairperson, which don't frankly pay as much as the private sector does. It comes with a lot of work. They have to do it because they care for the country and the capital markets, exactly. Right? You don't do it for the money. Why would you do it if your actions as a private citizen are being questioned?
Exactly. And And frankly, just the spate, every SEBI chair has done wonderfully. Just the quantum of regulations that have come in after Madhvi Puri Buch became the chair to safeguard investor interest just shows all of that, right? So, yep. And like I said, I went through the letter, and then Hindenburg has made a separate post in which they have made 3 or 4 claims, which to my mind seem a bit hollow, but that's my personal view. Let's put out a disclaimer there. But they seem a bit hollow. But the point-by-point rebuttal that they made with regards to, and what 361 also made with regards to their investments that they did as a fund when it was on as well, just seems to suggest that there's a lot of smoking guns out there in order to make the markets a bit nervous, in order to take advantage of the short positions that they or their clients might have. This is not a new thing. It's happened in the past. Now we know the template as well. Well, the smart money may just take advantage of any kind of dip that comes in. The only point to notice is that whether or not this brings about an exaggerated reaction or no reaction at all, my bet is that there will not be a meaningful reaction.
Also, just a quick, and of course this is all very important given how frivolous these comments are about the stature of a lady like her, right? So, extensive career, extensive change that she's brought about. I mean, she's dealing with a derivative crisis, if you may call, in India with so much grace, to say the least. But very quickly, also the comment made on REIT stood out, because this is one product and one asset class that's actually good for investors. It's a high dividend paying product, it's well taxed, and not just locally. I think the global REIT market stands to the tune of $400 billion. So this cannot be personal, and if you are moving towards a developed economy, products like these become very significant for retail participants.
Blackstone clarifies, and they clarify that yes, he worked with Blackstone, but he has nothing to do with
You're
their
right.
real estate
He's a
division.
supply chain specialist, and from what I understand from a few people I've talked to, he may have been associated in the supply chain specialist consultant capacity with the private equity arm. And let's not forget, for Blackstone, 80% of Blackstone business is private equity. A very small portion is REITs.
Just one or two points I just want to make, Niraj, before you come in, and those were some of the questions that we posed as well. Aren't we seeing the clear conflict of interest on Hindenburg's part?
Exactly.
Absolutely. They are talking about conflict of interest.
And they're not even pretending.
You are a recipient of a show cause notice from SEBI, so you've not answered it yet, but you're saying the person who sent me the notice, look at what they have done wrong. So let me reverse this and ask, where is the conflict of interest?
Exactly.
It's if I get a rap on my knuckles, instead of answering, I say, hey, you are the one who is in the wrong. That is the conflict of interest.
Yeah, it is. It certainly is. And they would say that, hey, we are known to have this conflict of interest. SEBI shouldn't. But my limited point is, in all of this, one, that the allegations are frivolous, but two, to assume that a body like SEBI is... the decisions are a one-person decision is just so astoundingly wrong. It's a body of people which make decisions. It's a system which is there in place, right? You can't believe, and I hope that some of the people, if they get nervous, don't believe in that kind of an allegation, which I thought was the biggest.
There is no nervousness from what we
displays a lack of understanding of how SEBI works.
And for certain, I think last Monday the street was far more nervous than it is this Monday, right?
Okay.
Despite news flow that is big in the country. Implied Nifty is indicating to a flattish start. Global cues as well are mixed, and I think, Tamanna, you want to take us through all the global cues, and we'll then, of course, set up trade. It's all about the last leg of earnings as well, which is exciting.
I just wanted to play out what Vikas Khemani said yesterday, because I thought that was a very strong conversation, and I told Vikas after he said this that, he is saying that nothing's going to happen today. I told him, let markets open, you come back and let's see if you were right. Let's listen in to what he said.
I'm not saying our system is perfect. We will have 10 issues. But all I'm saying is that, this is not something done with the right agenda or no intention. It is vested interest driving the agenda. I think markets have moved much beyond that. Our markets are far, far more matured. I think Indian investors have expressed the faith in Indian markets over last decade, and it is only getting better and bigger. And SEBI has done a fabulous job in protecting the minority shareholder, retail shareholder, their interest through various mechanisms, regulatory framework, transparency, disclosure, governance, So I have no doubt that Indian markets are very, very robust. We have best systems, right? So let's not link again two things. I think Indian market story I mean, we will keep improving. We are not perfect. We will keep improving. We will do much better. We are much better than many other markets. My only limited point is that don't connect these two things. We can have a separate discussion what we need to do to improve our Indian markets and Indian regulatory system. That's a very different conversation. But somebody coming and highlighting that our governance standards are poor, SEBI chairperson is conflicted, we are not doing it. And this is all complete baloney in my opinion. I think one needs to be just ignored. And I think markets will ignore it tomorrow.
Vikas Khemani said this last evening that markets will ignore it. But let's look at what the global setup is. And the global handover is actually fairly positive. So on Friday, you had a positive close for U.S. markets after a very volatile week. U.S. markets and key indices have not completely made up the losses from last Monday onwards, but definitely, had closed up in the green. Dow futures right now completely flat, actually. Can't even say anything negative happening there. Inflation data, which is out this week, becomes the next big trigger. So I'll quickly go through what is important to see. Tuesday, you have the producer price index out. Wednesday, you have the consumer price index out. On Thursday, you have July retail sales. So all of these data points become the next big drivers for U.S. markets all through the week. The 10-year is inching back to its pre-Monday, pre-jobs data levels of 4%. It was at 3.94% on the 10-year. No major changes in crude prices either, but Brent is trending upwards slowly and steadily, so closer to the $80 mark. We'll have to wait and see how geopolitical issues really pan out and whether there is any conflagration there. Asian markets, I would say, are important. Good opening on most Asian markets, and we'll pull that up. India's CPI data will be out, and that is being watched very closely. We'll pull up the implied open once again and just see where we are at over there. So when we started the show, we were at 45 points in the negative. Now it's 26 points in the negative. We'll see how that pans out. Remember, Friday was a good day of trade. Friday you closed up. The fund flows also saw buys on both sides. FIIs bought about 400 odd crores, while DIIs bought about 3,980 crores in Friday's trade. So if you cut out Hindenburg's antics from the picture, you've had a positive handover in terms of global markets. You've had a good close on Friday and a pretty decent set of numbers.
Yeah, so oscillating in a broad range, but most people say that downsides now seem to be a bit limited just by the texture of how the market went up. I'll make this very quick and move to stocks. But, smart money has been making tactical buys since last Thursday. So that is what I think if I count on my fingers, about 5 or 6 people that I spoke to said that they have been making tactical buys on specific pockets since Thursday. And any of the dips that come in, whether Hindenburg report led or otherwise, they'll be looking to bought into. So I think that is something that is very powerful to note.
Yeah, dips. I think our definition of dips is also changing as we go along, right? 0.5% nowadays is being called a dip, and you're seeing power. But Niraj, while I take the point that Friday was not a bad day of trade, what stood out for me is we failed to remove 24,400 conclusively. That was the last week's high that was made on a tough market. My only limited point is if we don't take that out, a push towards 24,700 looks unlikely for the interim at least. Global cues.
The very near term, you're saying?
Yeah, okay. For the near term. So I think for the bulls to come back with a little bit of gusto, it's going to take a conclusive 24,400 on the upside. But we'll wait and see. It was down about 1.5% for last week. Even though, like we said, Friday did well, it was a very stable day. We started gap up, stayed gap up, and finally pretty much closed at the level that we opened at. Not something that we see very often in a trading day these days. Bank Nifty is also what you want to track, guys, because Thursday it outperformed the benchmark. Friday as well, it managed to keep up with the benchmark. Today, as we go into trade, it becomes important to see whether Bank Nifty continues to give its vote of support. But I'm assuming global-facing companies like tech and metals may continue to do well if the global sentiment is positive for the day. We are on the last leg of the earnings season, and there are so many good earnings this morning that we'd like to highlight. I'll start with a few that I've got on my radar. So to begin with, we'll start with what happened with Bharat Dynamics. We saw good, strong performance coming from HAL on Friday. Contrary to the belief that defensive companies are all doing equally well and painting them with the same brush may not be correct, BDL has not had a great quarter. It's largely in line with what the street was expecting, but it's not been strong to say the least. Revenues were down 36% 26%. This has been a good, strong performing stock. Don't forget that. To about 190 crores versus 298 crores. EBITDA loss came in at 52 crores versus 32 crores. And net profit was down 83% at 7 crores versus 42 crores. Bloomberg estimates here were 104 crores. So it's a huge, huge disappointment in terms of what the street was expecting. Well, what happened is losses came in due to, they could have been worse because you've seen that, you've had an impact on losses and revenues as well. But there has been concerns, but some brokerages do believe that this is largely in line. What we may expect is the next couple of quarters to get better. Remember, last quarter was also weighed down by elections. So order wins, closures, order execution could happen on the sidelines. But all in all, on the face of it, the numbers don't look very impressive. Aarti Industries, they've come out of a bad quarter into a good one this time around. So keeping that in mind, Q on Q, it's been a good quarter for Aarti Industries. Even YOY, the performance has been largely in line with what the street was expecting. Revenue was up 31%, EBITDA was up 52%. Margins were up at about 16.4 versus 14.2 in the same quarter last year. The street was expecting 16.8 though. Net profit was 145 crores versus 71 crores in the same quarter last year. The street believes that the numbers are in line with what the expectation was on both revenue and EBITDA, but profit has come in at 148. The most optimistic expectation on that front was 137 crores. What you want to keep in mind is while the volume growth has been solid, the company had indicated it in their conference call last quarter, saying that from this quarter onward, you will see an improvement. Second half of this financial year will be important to determine whether or not the recovery is for real and sustainable, and this is not just a one-off quarter for Aarti Industries. So this, I'd imagine, may be on the buy side of traders today. Well, Siemens has done okay, but if you compare it to its competitors, it may not look great. Largely in line numbers. Revenues were up 7%. EBITDA came in up by 22%. Margins have improved to 13.3%, and this is an industry-wide phenomena where these companies have seen improvement in margins versus 11.6%. Net profit is also up 27% at 578 crores versus 456. So of the three stocks, ladies and gentlemen, I think Aarti was good, Bharat Dynamics not so good, and Siemens is good, but I guess because its peers have done so much better, this one doesn't look as good.
I would say BDL is a bit of a disappointment.
After what we saw with HAL last week, right?
Yeah. So that Inox Wind is definitely not a disappointment. Inox Wind I would put in the category of a good set of numbers. If I look at purely Bloomberg estimates as a barometer, the revenues were a slight miss, but EBITDA, margins, net profit have all been a beat on Inox Wind. Revenue up 83% at 639 crores. The estimates were at 705 crores. So very healthy bump up from 349 crores to 639. But expectations were slightly higher just on that front. Look at the jump in EBITDA. You've gone from 32 crores to 136 crores. Margins have gone from 9.2% to 21.3%. Net profit has come up at 50 crores versus losses of 65 crores year on year. Their order book has also jumped up significantly at 2,917 megawatts. Execution in quarter one is up over 2 times at 140 megawatts. And they will be setting up new manufacturing in 2024 on lease rental basis to minimize capex. Some notes out this morning as well, but suffice to say Inox Wind would be in the category of a good set of numbers. Likewise for Jubilant FoodWorks, which has had a couple of rough quarters, but things seem to be turning around, and basically their Turkey business, that DP Eurasia unit, has also fired for them. As you would expect when you're selling a product like Domino's, their online sales are much higher than what they're selling in the stores. So that has continued. But having said that, their revenues are up nearly 45%. EBITDA is up 38.8%. Margins have dipped slightly, and margins have actually come in below estimates. So that would be seen as a bit of a negative. Net profit has also gone up at 58 crores versus 29 crores. Again, slightly below estimates. But so I would say revenue is above. Margin, PAT is a miss, but strong overall. Where is the growth coming from in revenue? It's supported by the fact that they have waived delivery fees. That's why you're seeing that margin squeeze. So higher units being sold, but obviously since they've waived delivery fees, a bit of a stress over there. They've spent on network expansion and store growth. Their like-for-like growth reported at 3%. The India segment grew 9.9% and Domino's grew 8.5%. They have an order growth of 16%. That is good. So the order-led growth was, of course, offset in ticket sizes and delivery fee waivers, new product mixes, etc. But overall, I would say a thumbs up for Jubilant Food. Not so much for Suvain. Suvain has had a rough quarter. The management also guided for this kind of a pain, so that needs to be kept in mind when you look at the numbers for Suvain. They usually have a better second half, so you could give them that bit of concession as well. But having said that, revenues are down 33%, EBITDA is down 52%, margins have also slid from 48% or to 34%, and profits are down over 49%. So quarter-on-quarter revenue softness is being seen, not exactly comparable as their shipment schedule is skewed towards H2. The CDMO business has also been hit, but this was something that the company said could happen because of destocking. Those are the first three. I think two decent ones and one rough one with Suvain.
I pretty much have the same pattern. Two decent ones, one rough one. The only thing is my decent one has guided to some issues ahead. So let's start with Balkrishna Industries as the first stock. Very good set of numbers, and relative to what some of the other tire companies have done, I think it stood out. Revenues up 25% at 2714 crores versus 2159 crores. Margins for a tire company, 120 basis points expansion is not a mean feat. It's not a small chump change. So 23.2 versus 24.4. Net profit as a result up 47% at 490 crores versus 332 crores. But like I said, I think the outlook that they have guided to is a bit, or maybe not guided to, but seems that it is going to be a bit soft. In fact, the growth guidance for FY25, despite a very strong Q1, was very weak, and which is what probably seems to be a bit of an issue. I'll very quickly make the other two ones. The one that stood out really well is Jyoti CNC, and watch out for the CNC machining companies. Revenues up 74%, margins at 25.9 versus 8.2. So very strong set of numbers from Jyoti CNC. Very likely the stock could see a bit of a reaction today, and a positive one at that. I'll add to the PSU list Midhani. Very wobbly set of numbers. So while SCI had a great quarter, Midhani and BDL stood out for the weak numbers. Midhani was a weak set of numbers. The margins cracked, the bottom line came off. Very likely that this stock could see a negative reaction.
Right, I'll add a good good stock to your list of not such great numbers. It's Shipping Corporation of India. Very, very solid performance from SCI. We'll quickly highlight those for you. Profits are up a whopping 70% at 290 crores. Revenues have also seen a pretty big jump. Margins have also improved. So all in all, it's a strong quarter from what I understand on Shipping Corporation of India. So no sort of concerns on this one. You've also got two more that I'll highlight, which were not so good. So Sun TV had a weak quarter. Revenues were down 3%. EBITDA down 10%. Margins have also come off at 54.7 versus 59 plus sort of margins that they've had, and net profit was down 5%. Bajaj Consumer, again, very weak numbers. Revenues down 9%, EBITDA down 24%. Margins have shrunk significantly, coming in at 14.9 versus 17.7. Net profit was also down nearly 20%. So of the three, SCI good, Bajaj Consumer bad, and Sun TV also slightly below what the street would like.
Tough industry. All right, very quickly, Honasa. Looking good, actually. Volume growth has been 25% and showing in the numbers. EBITDA is up 57%. Margins have gone up from 6.3 to 8.3%. Profits are up 62%. 2%. So the thing is, it's an operational improvement because PAT and margins have been a beat. Revenues and EBITDA are actually a little lower than Bloomberg estimates. Margins have been aided by better sales mix, positive operating leverage, and reduction in logistics cost. Not so great for CE Infosystems. They prefer to see a YOY comparable, and the numbers we have is Q on Q, so just keep that in mind. The management themselves likes to see it Y on Y. Revenue is down 5% this quarter. EBITDA has improved though, up 7.5%. Margins have also improved, better than Bloomberg estimates. Net profits are down 5.3%. So revenues and profits are below, margins are above estimate. They are going to be ramping up their old programs for the auto space. This is Map My India in Q1. And new program ramp-ups have begun already in Q2. They're getting into drones as well. But I don't know if that will be seen as a positive because no one knows how much money they'll make off it. Metropolis was decent.
Just that seasonality in CE. Hopefully that will change.
I mentioned.
Okay.
They like to see it year on year. These are Q on Q numbers, and seasonality is part of it. Definitely, I agree with that. Metropolis revenues up 13%. EBITDA up 25%. Margins have improved and ahead of estimates at 25.2%, and profits are also above estimates. So Metropolis, another good set of numbers. Look at the other one in its space, Dr. Lal Path, was also pretty good. Growth in patient volumes has been seen, increase in revenue per patient by 6%. That would be a positive if you go into the details. Where is the growth coming from? Their packages. Wellness, bundling packages, specialty segments, that's what's working for them, and we'll hopefully be speaking to the management ahead. But let's come back to the big story this morning we're tracking, and Ajay Roti, founder and CEO at Tax Compass, is joining us. Just to put things into perspective, we're talking about the Hindenburg hit job. Mr. Roti, very good morning to you. Thank you for speaking with us here at NDTV Profit. Now, while we've been talking about why this is a hit job, the hit job has been punctured. If you look at it factually and see the rebuttal, point by point rebuttal that has come in, is it now becoming apparent that Hindenburg actually has been clutching at straws?
Yes, you're right. I think there are two things which are apparent. One, that they are clutching at straws. And also the second thing is the timing and why are they doing it now? And that's becoming even more clear with the second response and everything that they're doing. The first time they were having allegations about individual stock and whether they've taken short position, they made money is all another story. But what did they do the second time? They're actually going after the regulator, and they're actually going after, in that sense, the entire market, even if they're short. You need to note there's nothing about Adani again in the second set of allegations. And now they're doubling down. So clearly clutching at straws, no doubts about that.
Okay, so just the point, Mr. Roti, when we speak to people who look at equities from an investing perspective, they believe that while they might be in put positions, so on and so forth, not a major reaction, but that is a market's view. From somebody who looks at it not just from a lens of investing but otherwise, since you mentioned this as clutching at straws, the beyond market impact, do you think, if any at all, would be very short-lived, because these things tend to, like a hydra, tend to make a bit of a comeback every single point of time they are suppressed?
Yeah, so, in terms of beyond the market, what is their allegation? Even if you were to take it seriously and consider it, it's really about whether there are, the Indian regulator, and especially the SEBI chairperson, is independent or not, and if there are conflicts of interest. I think SEBI has a robust code of conduct for all their whole-time members, for the chairperson herself, in terms of disclosures, in terms of recusing themselves from matters when they are before a board. The decisions that Hindenburg says have been taken by SEBI are all taken by the board. Nothing is taken by a person alone, including the chairperson. Therefore, I don't think there is anything that we need to be looking at from a more governance perspective, improving how our regulator works and things like that. Of course, there's always a scope for improvement. Could these disclosures be made public? Could assets and transactions and conflicts of the whole-time members, chairperson now be put up on the SEBI website? Could be an improvement. But I don't think there's anything drastically different that needs to be done from how our regulations are or how SEBI functions today. That could possibly have been the only larger outcome that could have been if there was any credible allegations that they had actually leveled, which I don't think they have at this point.
And as we've been saying, the conflict of interest is apparent because they have a summons or a show cause notice to answer, which instead of answering, they've come back with this hit job. Thank you so much, Ajay Roti, for speaking with us this morning and giving us that perspective. We'll take a very short break. We're speaking with Nissan Joseph, CEO at Metro Brands, on the other side. Before we go into that break, a very quick look at the implied open and just tracking what Indian markets are going to do this morning after that attempted shake-up. Well, the Nifty implied open just about 7 points down. We are looking at a flat start as of now. We'll be right back.
Welcome back. You're watching India Market Open, and as we were setting ourselves up for trade this morning, as expected, it is going to be a good start for D Street. Global cues are positive and implied Nifty now gradually seeing a smaller cut as we get closer to pre-open trade. Remember, it won't be a surprise if we get a positive start because your global cues are positive and the markets at whole have rubbished the allegations made by Hindenburg against the SEBI chair. So it's all going to be about earnings, it's going to be about how the street is feeling, global cues and everything else that plays importance daily. Well, talking about earnings, Volta's numbers are flashing on your screen. Quarter on quarter, this one's failing to not failing to disappoint. Very good numbers, beat on EBITDA, revenue, margins on all parameters. Voltas has reported numbers stronger than what we were expecting. We will get some more analysis on those earnings in just a few minutes with our researcher as they put that together. But talking about another company that reported earnings is Metro Brands. Nissan Joseph, CEO at Metro Brands, joins in to talk to us about how the quarter has been and, of course, what lies ahead for the rest of the financial year. Good morning, Mr. Joseph. Joseph. Thank you very much for taking out the time to talk to us this early in the morning. Sorry, we've kept you waiting, but we had a commercial commitment to finish up with. But Mr. Joseph, good quarter. Give us a sense of what like-to-like sales look like. And I refer to this because this is what your sales numbers are for the same number of stores in this quarter.
Right. So, well, good morning and thank you for having me. We don't normally disclose like for like, but, if you were to do the math and figure out that, we have about a 5% lift from new stores, 5 to 7% lift, and then that we were flat in revenue, you could probably work backwards to the like to like, but I think it's as in retail, you've got to look at the history of how that you come up with that like to like number. 2 years ago, we had a ridiculous 294% growth because we had just come out of the COVID quarter and, people were revenge shopping and all of those things. On that quarter last year, we still had a 12% growth. This is the quarter we're going against those big growth numbers for 2 Q1s consecutively. And we had some headwinds here because we had very few wedding dates in this season. We also had, an incredible amount of heat waves. And of course, the elections, which is fantastic, also required our stores to be closed a day across the country in support of the election. So we had a couple of headwinds that got to us this quarter. But overall, though, I feel good about where the consumption is going. I feel good about the indicators we're seeing. And as the quarter has turned, we're starting to see business get more in line with how we would have predicted.
Joseph, it's good times for footwear brands, and we've seen a couple of the big brokerages as well, fairly constructive on the multi-brand offering of footwear companies. Give me a sense of what penetration is looking like pan-India. We'll talk about exports in a minute, and also locally, sports and athleisure. We talked last quarter, and we discussed this at length. How is penetration there? What are sales numbers looking like in the sports and athleisure vertical, largely because I believe a large part of the growth in the next few years could potentially come from this segment?
Yeah, so I think when you speak about core brands of Metro, Mochi, and Walkway, I would say our penetration is minuscule, right? Metro has a little over 300 stores, and in a country as vibrant and big as India, 300 stores is nothing, right? And Mochi has 200 stores, and Walkway has 60 stores. So each of those banners independently, the penetration, I think, leaves a large white open space for us to continue expanding in. But to speak to your question about sports and athleisure, yes, we do see that business continuing to grow. Sports today, sports and athleisure is north of 15% of our business at Metro, Mochi, and Walkway. And as you know, we've also signed on Foot Locker and Fila. We think both of those will be able to capitalize on the growth that's coming on in sports and athleisure. Today, from a consumption standpoint, India consumes about 1.4 shoes per capita. As that grows, we also see most of that growth coming from the sports and athleisure segment. And also there's going to be a casualization of footwear, right? I think people are seeking comfort more and more. And the good news is Metro plays to that. And so will Fila and Foot Locker play to that as well.
Mr. Joseph, good morning. This is Tamanna here. Just wanted to talk to you a bit about what we've seen with margins this quarter. Flat, just a slight dip perhaps. Do you see margins in this range for the next quarter and the financial year? What is the kind of outlook going there?
Yeah. So Tamanna, that's an interesting way to put the question. They are flat, no doubt, but it's flat at 60%, right? So what I do want to point out that at 60% is industry-leading margins. So when you hit that top, we're comfortable staying in the 57 to 60% gross margin rate. And that's a range we will always be within. This quarter with the end of season sale, that margin will dip down a little bit just as we liquidate products. The following quarter will pick back up again. But overall, we've guided that our margins will be north of 57%. And our PAT would be in the 15 to 17% range. And I'm very pleased that despite a challenging quarter, that we've achieved both those numbers.
Okay, so you're seeing the same range for the rest of the year?
Correct. And that's something overall when you add up the 2 quarters, Q3 and Q4 coming up, right? So we're pretty confident that we'll be able to deliver those gross margins.
Okay. Just wanted to get a sense on your strategy in terms of e-commerce, because e-commerce is growing fast, 62% CAGR in 3 years, but you're also investing in more stores. Are you going to have those two run parallelly? This is, a big question globally as well in terms of whether shoe companies, focus on the e-commerce side or the store side. I'm wondering what your strategy and outlook is.
So, we see e-commerce as additive to our brick and mortar sales. And I know that sounds contrarian, but the reality is people start the journey digitally. If they can get to a store, they would love to have the store experience, the selection and the fit that comes when they go physically to a store. However, sometimes our customers are a little time starved or not able to get to stores, so they rely on the e-commerce vehicle, right? Overall, e-commerce is about 10% of our business. And when I look at it globally, Tamanna, I'm not seeing anywhere where e-commerce overtakes brick and mortar. In fact, we've seen a resurgence of brick and mortar post-COVID. E-commerce definitely is a very strong contender. Whatever happens, though, we've honestly continued to invest heavily into our digital space because we know that a lot of the customer journey is starting digitally. Now, whether they fulfill that online or whether they fulfill that with a visit to the store, a lot more of it's starting digitally. So one has to stay quite savvy. But on the flip side, I'm not keen on growing it at a faster than normal rate or a normal organic rate, simply because, as you know, the e-commerce space tends to be a little discount-led. And that's a game that Metro does not typically like to play in.
Mr. Joseph, good morning. Niraj here. Just one question. You've had a very strong CAGR performance since the COVID lows, right? You kind of turned it around, done very well. This quarter, if I strip off the other income numbers as well, it was a flat quarter even with the other income. So is this a one-off in the quarter? Is your guidance for a particular number for FY25, FY26? And do you hope to be able to meet that after the Q1 performance?
Yeah, I think every retailer wished they had a great crystal ball ahead of them that they could predict everything. Niraj.
But management's, leave out an exact prediction, but I'm sure you, by virtue of running the business this large, have a sense of what the growth could be.
Sure. I think over a period of time, and that's hence we talk CAGR, right? Instead of year on year or a specific window of time, we're very comfortable with the 12 to 15% CAGR growth, over a period of time. And if you go back to our pre-COVID numbers and you were to look at it, we're right within that range even after last quarter. So, that's a number we're comfortable with the growth. And I think that a large part of it has to do with the potential that exists in India.
Also, just very quickly, Mr. Joseph, before we have to let you go, your export business is looking good from what we understand. It's also a better margin business. What is the sort of growth you're penciling in for your global markets and the margin outlook there? Any upside risk to those margins there?
I'm not sure where you're getting those numbers, but we have a zero export business. We are fully focused on India. And I often joke that I think we'll look at exporting or taking our concept abroad, right around 2050. But because there's so much opportunity in India, we want to stay focused. And I think that helps our business grow as we stay focused in what we want to do, but equally what we don't want to do.
Right. Well, good luck, Mr. Joseph. I hope for your sake and for Metro Brands that it becomes a global brand that you aspire to be local with global roots or global with local roots, for all you know.
Thank you.
But good luck and we'll see you soon.
Thanks.
Well, just before we wrap out and go off to Agam, a quick check, guys. I know, Niraj, you weren't there on Friday, but what a day for Ola Electric. 2 days before the listing, of course, most people were circumspect. It was an expensive one. You talked to Bhavesh Agarwal. The next few months may be a challenge before they turn profitable. But I would imagine that beyond all that we've talked about this morning, it'd be interesting to see what happens today after a 20% up move on listing day on Ola Electric. So if you had to have your bets, anything on that, guys?
For me, what was interesting is right before its listing, the grey market price and the buzz was that it would list at a discount. And it listed pretty tepid, but then sprung up through the day. So, I'd be very, very curious to see how Ola fares today in trade. And I think there's still some buzz. At the get-go, the way they priced the issue was seen as a positive. They went out, took feedback, and this is something that Bhavesh told me in our conversation as well. And then they decided to bring it in a price band which is palatable to retailers. I mean, their claim is we want retail investors to also make money. One way or the other, I think the price point has worked.
Has. Sorry, please finish your point.
Also, what was interesting is usually you get stocks that see a good gap up and then build on it if these are, aspirational IPOs that participants haven't got their hands on. But with Ola, it started very flat.
Yeah.
And it built and built, and I think by the time it was 12:31, the stock had upper circuit, and the commentary also sort of changed, right? It then suddenly became a good stock to own. You could look at it for the next 3 to 6 months. I think there was some biases that changed guard very soon after the stock hit 20% gains.
Yeah, it'll be interesting to see that. But just before we go to Agam, the stock really, guys, while I wasn't here, that stood out for me for Friday was Trent.
Oh, yes. How did we forget?
This is a business which trades at 150 times, going up 11% after such a stupendous set of numbers. So, quite stunning, really. I wonder if Agam has spotted something in Trent or otherwise. But Agam, lots happening. Markets at large important because of all that's happened over the weekend. I wonder what cues are you reading, and on specific stocks as well. And I just wonder if Trent also features in that list.
Yeah, it is. In fact, it's at the top of our list of stocks, which have actually seen a significant increase in open interest towards longs. But I'll come to stocks in just a bit. Let's start off with the Nifty 50. Well, it was a day of trade where we saw advances to the tune of around 1%, unwinding a lot of your older shorts unwound at the moment, and we're in fact starting to see the Nifty rise again. The Bank Nifty also advancing by around 0.7%, again unwinding there as well, even as this open interest declines by around 4.5%. In terms of the options market, we did see the Nifty advance, and which is why there was a little bit more base building around the 24,000 put mark. Now, while there is base building there isn't as much traction as you can see on your screen there when it comes to puts. Otherwise, there will be a little bit of resistance around 24,400, 24,500, because that's where we're seeing a good amount of call accumulation around those strikes. So a rough range, a 500-point range between 24,000 and 24,500 is what we're keeping an eye on as we move into trade this week. And, well, as far as stocks are concerned, Trent certainly is the one that actually surprises everyone, because that moved up by as much as 11%, made a new life high, a lot more longs coming in fact, 15%, 16% added in open interest, even as it moves above the mark of, comfortably above the mark of 6,000 rupees per share. Besides that, of course, we have MCX, which is starting to see a lot of positive traction. Lupin, of course, among the others, which are also advancing in trade. Among stocks which saw unwinding, let's pull that list up as well. We had short covering for Bharat Forge, Tech Mahindra, Punjab National Bank, as well as Hindalco. But, as some of you are pointed out, it's Trent, and to see and expect whether or not there could be a little bit of a break. Well, it doesn't seem like that, because there is a tremendous amount of momentum, and we're going to have to wait and watch as to when that consolidation sets in. But for now, of course, in general, of course, the markets are looking good.
Well, thank you for that, Agam. The markets are looking good. The F&O picture indicating to a fairly healthy setup in trade. Stock of the day, like Niraj Shah and Agam both highlighted, has to be Trend. Went in with a gain of 11% on Friday. Kush and Sony both joined in with a technical view on the market. Sony, before we go into the markets at large, quick word on Trend. It was your big gainer on Friday. Volumes were healthy. F&O activity was also very healthy. And fundamentally, enough and more reason for an investor to buy the stock if it's earnings related. On the charts, if you get a gap up on Trend, would you consider going long?
And good morning, Samina, Niraj, and everyone. Thank you for having me on the show. So I think Trent has given a very strong breakout on Friday's close. It crossed 6,000 resistance. It has even comfortably closed above that. However, today's gap up may not be an indication to buy fresh at those levels. Rather, if somebody's already bought it at low levels, can look forward to booking some profit. Just wait for a sizable dip towards 6,200, 6,000 level. That range again can be the zone where one can reinitiate the longs. And it'll be wise because the risk-reward ratio becomes quite favorable. So just avoid any gap-up scenario. Rather, book your profits and just wait out for the dip to come in.
All right, Avinash Gorakshakar also with us this morning. Good morning, Tamanna here. Just want to get your sense of the mood that you see today after a very volatile week, Avinash, which is why, considering everything that's happened over the weekend and a complete flat start as per the implied open, what would be your strategy today?
Yeah, good morning, Tamanna. I think, clearly on a broader market basis, I think stocks would be in key focus. I think if you look at the key numbers from Voltas, I think Voltas has delivered very strong, robust numbers. I think after a long time, numbers have been quite encouraging, both on the revenue as well as on the EBITDA and profit after tax front. This kind of trajectory definitely should be welcomed very well by the market today. Another defense stock, Mazgaon Dock, has got an order of almost 4,600 crores from ONGC. So, these stocks would be in focus. But I think broadly, the index would be a little, mildly negative. I think one should focus on the broader market. And I don't think markets are going to see any major panic sell-off markets would obviously look at the earnings numbers, because there are many companies which are going to deliver their numbers today. So I think typically it would be stock specific, Tamanna. We continue to tell our investors that any dip in the market, specifically for companies which are posting decent numbers where the commentary is also positive, should be a good opportunity to accumulate. So I think broader market will continue to be in focus with a stock specific activity, but the index may remain a little mildly negative. And I think on the index level, we are not very sure or positive that we could see a very big dramatic increase, at least in the short term.
Okay. Kush Bora, we are very likely to see a flattish start. Do you reckon a continuation of momentum? And if so, what's the strategy for the day? Are you buying the Nifty futures? If at all, are you buying Bank Nifty futures? Are you buying options? What is it that you're doing? Actionable stuff.
Hey, hi, Niraj. First up, a very good morning to you.
Very good morning.
If I last time around, I said that, if I were a betting man, I would go long on the Nifty. That was on Thursday, and I think I missed my opportunity or my window there. I think that view continues, albeit with a caveat. Friday's session was extremely strong, not in the sense that, we've had a good closing. It's that, throughout the session, we've maintained the gains and all the sectors have participated. Almost all major sectoral indices ended in the green. So that's, what you would take heart from. But from a technical standpoint, both the indices, Nifty and Bank Nifty, are trading under their key averages, under the resistance zones. For Nifty, it's 24,500. For Bank Nifty, it's 51,000. So until these levels are taken out, I think the near-term pressure that, Avinash was alluding to a while ago will continue. But the kind of bounce back that, we've seen from whatever mild dips, if we can call them that, that's actually quite encouraging. So if you've got a long position, continue to hold. If you want to take a fresh position, my suggestion that, it should be on the long side. At the moment, there aren't any fresh triggers to go short. So if you're going long, then for those new long positions, 24,200, 24,150 is the zone where you place your stop loss. For Bank Nifty, about 50,100, 50,150 is where you place your stop loss. But even with a mild kind of an upside potential, the position that you want to create in this market is long, at least for the near term.
All right. So those are the initial calls. We'll come back. We'll take picks from Sony, Kosh, and of course what Avinash's top sectors and spaces are for the morning. Very quick break. We're coming back with pre-open rates and more. Stay tuned.
All right, back with India Market Open right here on NDTV Profit. The pre-open rates suggest a start in the green, so bear that in mind. It's or marginally in the red, if you will. It's bobbing between the red and the green, so keep that in mind. Having said that, it's very important to focus on stocks because there's a long list of stocks which will react today positively or negatively. I mean, Voltas numbers came out today post 8:30, very likely will have a very strong reaction as well. So a clutch of names to watch out for. Before we get to those specific pockets, let's figure out the stock ideas from our experts. Sony, what are the stocks that you're recommending for the session today?
So, Niraj, the first would come as a pick in PFC, which has seen very aggressive open interest additions at 500 put and 510 call options. So that's a good consolidation range. It has to break either side. The charts are indicating that any move above 510, the stock can head higher towards 535, 540 odd levels. And there's good support placed around 490, 485 zones. I think that's the range to look out for. So one can buy and accumulate at current levels in the range of 500, 505, keep a stop loss of 480 and a target of 540, 545 also can be seen. The second pick is a conditional buy in Bosch Limited. So there's a resistance around 32,500 in Bosch. Only if a move can be seen above this resistance, one can buy at those levels, keeping a stop loss of 31,000 and a target of 34,000. Can be seen. And just as a disclosure, both of these calls are an official recommendation, but we've recommended via the call options to our GM clients.
All right, Kush, let's look at your calls this morning. I mean, the global handover is good. Implied open is looking completely flat. It's going to be stock-specific action. What are you looking at?
Indeed, I mean, I think the indices won't really give the true picture of, what kind of actions happening in the market. So stock-specific action are plenty. Just a couple of updates, Tamanna. Nava was a stock that we had discussed, I think, on Thursday. Friday, it hit the first target. Saw a sharp round of profit booking. But my suggestion that, if anyone's got it, then continue to hold with your trailing stop loss of 890. That is for Nava. The other one is SJS Enterprises. This one we discussed with a target of 1020, about a 10% gain on this one before seeing a sharp dip. 1070, 1080 was the high that it touched. So continue to hold on to this one. You might in fact want to consider booking partially. So this is an update on Nava and SGS Enterprises. For the day, two stocks as per DM. Now this is a positional bet with a potential upside of about 20%. The stocks seeing a fair degree of revival. On all technical fronts, you would say that, the litmus tests have been cleared. Trading above all of its averages. We've seen a volume uptick for the last 5-7 odd sessions, and the stock's actually moving higher. There is a potential that the stock could head to 480 also. Interim target, interim target being 445. So those are the two targets that you work with: 445 and 480. 375 is where you place your stop loss. The other stock, also from the cash segment, is Orion Pro. Now, this stock has had a very sharp run, over the last 2 months. It's seen a consolidation for the last few sessions, but I think, from the volume action and the price momentum action, I think it's ready for, another leg of up move. 760, 790 are the two targets. 1680 is where you place your stop loss.
Pre-open indicating to a very flat start on the index, largely in line with what we were expecting. We'll let the market settle before we come back and take you through how things are playing out there. Avinash, I don't know whether you looked at the numbers from BDL. You had HAL on Friday, which reported very strong numbers. BDL, on the other hand, has seen a decline on every parameter from EBITDA, profit, revenues to margins. Do you feel this will, and so did Midani actually, weak numbers from them too. Do you think this separates the men from the boys when you talk about defensive stocks?
Good morning, Samina. I think clearly numbers have been disappointing. And I think, we would have to look into the fact that whether execution in this quarter has taken a backseat. The company still continues to enjoy a very strong order book of almost 3,500 to 4,000 crores. So it's quite surprising that, these numbers have been extremely disappointing. So I think, clearly if it is a one-off quarter where execution has been weak, I think the markets would obviously give it another chance. But I would not be surprised that, the momentum could possibly pick up in the third and the fourth quarter. So I think it's not that, the company will be underperforming compared to the other majors. They have a strategic kind of product base, and most importantly, they've looked at exports also in a big way. So I think we'll have to wait for further clarity. But yes, I think on these numbers, today the stock would obviously open with a weak opening. And I think only once the management commentary comes out, the conference call is out, we could possibly see some sort of uptick in the stock. So we continue to be positive. But yes, I think on a quarter-to-quarter basis, one could definitely expect a little more volatility here.
Just a couple of minutes of pre-open trade. So keep that in mind that it's not quite settled yet. But let's see what's moving this morning. Look at an Inox Wind. We talked about their numbers. Numbers were good. You're seeing that stock about 7% up in pre-open trade. Aavas Finance, CVC, will be acquiring 26% in Aavas Finance. That stock's doing well. Honasa, we talked about their numbers. Numbers were looking pretty decent for this quarter, 5.5% up in pre-open trade. Amara Raja has given more details about its tie-up for this new set of batteries. That's doing fairly decently. Jubilant is the other one that had a pretty decent set of numbers. So that's what you're seeing on the buy side, and that's where some of the focus is going to be. I want to see what Shipping Corporation of India is doing. Another decent set of numbers. That's also, 5% up right now. Let's look at Ola and how Ola is behaving pre-open, if at all we'll see anything. Yeah, another 12% up. So, okay, let me come to you, Avinash, on Ola Electric. The IPO turned out to be better than expected, or sorry, the listing turned out to be better than expected, or what the street was expecting. Do you think that there is some merit in looking at Ola right now?
Yeah, I think, Tamanna, I think on ground we have been finding that, the Ola two-wheeler electric vehicle is one of the best in its categories compared to all the other two-wheelers. So I think, in terms of the product, they are very well positioned. My sense is that this could possibly take a little more time to show, profitability, maybe for the next couple of quarters. But I think the markets are clearly looking at the fact that the market share enjoyed by the company and the longer term visibility of this business gives it a good, kind of premium kind of re-rating. So typically, I think somebody who's got a 12 to 18 month time frame can definitely look at buying anything below 100 rupees. I think definitely, this narrative is going to work out very well initially. But later on, the markets would obviously look at data points and look at the numbers. So till then, I think the stock would be in positive, momentum.
It's going to be an interesting play. 20% on Friday, another 11% today. So I think all the guys of Friday are doing quite well in pre-open trade. From the likes of a trend which continues to look good, Ola Electric is also adding to its party on Friday. Adani Green, there's a big brokerage bet coming in from MK on Adani Green. Mihika is standing by with more on that. Mihika, what are they saying about Adani Green, and what is the expectation or target price that they have for Adani Green?
Yes, so MK Research has initiated coverage on Adani Green Energy with a buy rating, and the target price set by the brokerage is 2,550, which offers a 43% upside to the previous close on Friday. They expect the company's renewable energy capacity to see a 30% CAGR during FY24 to 30, and the company has been focusing on Gujarat and Rajasthan sites where capacity utilization yields are the highest globally, and this improving capacity utilization, the brokerage expects to drive sales CAGR of 35% during FY24 and 30 for the company itself, and it will also help in driving their cost leadership and make it better for the company to for future bids. They expect the company's plain vanilla renewable energy capacity share to also grow to 15% by FY30 versus 8% currently, and they've cited how the company has varied sources of funding, and the recent promoter infusion of 7,000 crores will help and secure the company's future growth via internal accruals. And lastly, MK has also noted that they expect the company's net debt to EBITDA ratio to fall from 7.4 times currently to 3.6 times by FY30, and this is despite the heavy capex plans the company has.
Right, Mihika, thanks a lot for that. Must mark, though, that the Adani Group stocks today, a sentimental impact on some of those. Adani Green itself is about 4-5% lower, but Adani Wilmar, Total Power, all of them down about 5% apiece. Adani Ports about 3%. Adani Enterprise about 3%. So a very sharp gash at open. But those are the fun and game rates, and then the actual rates settle down at 8 a.m. It'll be interesting to see what happens during the course of the day. But the other interesting piece is what's happening to some of the PSUs which came out with numbers and are sulking. Bharat Dynamics is down 18% in the first 6 minutes or first 7 minutes. So even if this changes and goes down to 10%, that'll be a very sharp gash. And remember, it's an expensive stock. Again, this may change, but if the reaction is 10-12% lower, I would probably anticipate that might well be a right one because the numbers were a bit of a howler. Midhani too, the numbers were bad. I don't know what the stock is doing, but those are some names that you want to keep an eye out for in the session today. 6% lower for that one. And on the flip side, by the way, the one PSU which did well was Shipping Corporation of India. Pretty good set of numbers. Avinash, the PSU names, Midhani, SCI, BDL, do you track any of them individually, fundamentally?
Niraj, we do track Bharat Dynamics and SCI. My sense is, as already spoken on Bharat Dynamics, I think this seems to be a disappointing quarter. Maybe execution was weak, but if you look at Shipping Corporation, I think numbers have been pretty encouraging. And within the other defense PSU basket, we believe that even Mazgaon Dock, with the news flow of today, getting an order of 4,600 crores from ONGC, that could also be an interesting bet to watch. Clearly, I think most of these defense companies, Niraj, one cannot evaluate them on a quarter-to-quarter basis because business is lumpy. We could expect stronger growth in the second half, and whatever underperformance has been seen in the quarter one, probably that could be, more or less covered up in the next, 8 to 9 months. So I think one has to be a little patient here. Valuations are expensive. So I think any negative news obviously gets greeted by a very big negative kind of, drawdown on the stock. So I think longer term we are positive, but yes, I think fresh buying should be is advisable only on lower levels.
That's a few movers and shakers this morning. A check on Aarti in drug industries as well. They reported numbers. Let's take a look at Siemens too. Aarti doing well, 2.5% as expected. It's been a good quarter for them. Siemens down about 1.5%. And you've got a whole bunch of some of those other names. So Inox Wind, Aavas Financiers, Honasa, Jubilant Foodworks, Mazgaon Docks are all. Mazgaon Docks has won a pretty big order the last time I checked, which is just a few minutes ago, on back of which the stock is getting a positive response to trade. On the sell side, you have EIL, Home First Finance, some of those Adani Group companies, like Niraj said, were seeing a sentimental impact, but it's not bad at all. It's about 2% cut in pre-open trade. More than likely will get bought into from the get-go this morning because there's really no reason for these stocks to be selling off in trade. So it's not a bad start for the markets.
Standard disclosures there?
Yes, standard disclosure. The channel you're watching is owned by the Adani Group, so keep that in mind. But the disclosure also that the markets are trading flat, as we say. Kush, I don't know whether we got a view from you on Bank Nifty. If we do get a flat open, Thursday, Friday, the days were, Thursday there was outperformance, Friday it held out, but didn't do as well as the index. As we go into trade this morning, does Bank Nifty become a good trading opportunity for this week?
Yeah, I like that question from the perspective that, it's for a week. Daily, it's perhaps seeing a bit of a selling pressure. As I said, 51,000 is the key level beyond which, we'd be very constructive on the Bank Nifty. But for now, the kind of support that we've seen over the last two sessions and the kind of moves that we've seen, I think 50,100, 50,150 is a good support zone where you place your stop loss. And either you continue holding your long position, or maybe once the market settles in the initial, 15, 20 minutes, maybe half an hour, if that strength is visible today as well, you go ahead and, build your long positions with 50,100, thereabouts being your stop loss.
Okay. So 4 minutes left. Now, let's nail it down to some specific movers in trade. And, let's try this. Would you, Sony, take any long or short trade on Trent?
So Niraj, Trent, what we can see is, holding above the support of 6,200, 6,000. So that 200 points range is very strong as of now. I think once the market opens, it's wise just to wait maybe like a 15, 20 minutes before jumping into any sort of trade for the day. So if it's holding above the support range, one can attempt to buy with that support as a stop loss itself. And the stock has the potential to head higher towards 6,500, 6,600, but that's a positional play. It won't be an intraday play. I think that's very imperative to understand. The buy on dips is a far better strategy than just to jump at current levels and hold as long as your stop loss is staying above 6,000, which is a very crucial and good support for Trent as of now.
Right. Sorry, yeah. Avinash, you want to come in on a couple of stocks that you've seen with regard to earnings that you like and you would look to add to your portfolio if you got an opportunity. And also, while we're at it, some of these Adani stocks may get a gap down of 1.5–2%. Nowadays, we're calling those also dips given the euphoria in the market. Which stock would you add to your portfolio if you get that opportunity today?
Yeah, I think, Samina, as far as the Adani Group stocks are concerned, we continue to be positive on Adani Ports. I believe any weakness in the market today, purely due to sentimental reasons, should be used as an opportunity to accumulate. We believe that, whatever has happened is going to be a non-event. Markets are going to focus more on data points and earnings. And, this is not going to impact the fundamental basic story for these companies. So Adani Ports on dips, even at the current level, looks quite interesting. We are advising our clients to actually add more, at the current levels. And another stock which is interesting is Radico Khaitan. Company came out with a very good set of numbers, a 19% growth in top line, 25% growth in EBITDA, and almost a 21% growth in the PAT. And most of this growth has come from the premiumization, product mix. Our sense is that this year will be another strong year for Radico. The stock is trading below 1700, and I think the market should obviously look at it more closely once more management commentary comes in. But clearly, I think ENA prices as well as glass prices have started moderating. So these could be additional triggers along with the premiumization strategy. So we are looking at a price of almost 1900 to 2000 over the next, say, 12 to 15 months. So this could be a good bet in the alcohol consumption kind of category space.
Tony, last call from you before markets open. I haven't had a chance to talk to you this morning, but hi, and great to hear from you. Last stock call when you've looked at the pre-open rates that you would pick.
And good morning, Tamanna. So I think for looking at the pre-open rates, Jubilant Food is a stock which has been consolidating and has given a good breakout. That level of 605, 610 level seems to be broken even in today's pre-open rate. So I think 608 for intraday is a good support. Just hold with that stop loss. The stock can test with 622, 625 for intraday levels.
By the way, the internals for Jubilant were very, very strong. I think the City note suggested that the outperformance is just starting. Somewhere around that is what their call was. So keep an eye out for Jubilant Foodworks in the session today as well. Sony's given it as an intraday call from the prices that it's starting off with. Okay. Avinash, take a moment to thank you, of course, for joining in today. Really appreciate your time. But the markets are just starting off in about 10 seconds. Watch out for some of the result reactions that have come in or will come in the session today, simply because a lot of stocks came out with a very impressive set of numbers, including Voltas, by the way, which is up about 5% in the pre-open session. But here come the first trades this Monday morning. Well, about 0.25% lower. Banks dragging the markets lower a bit, about 0.3%. So in line, about 0.33%. Maybe slightly worse off than what the implied open was suggesting, but still about 0.33%. Mid caps and small caps should come up on your screen very briefly and just see what's happening there. About 0.67% for the mid caps, small cap index, 0.5%. Let's get the heat map up on the screen and see what's moving and what's not. More red than green. Let's start off with the reds. Adani Enterprises and Ports about 3% apiece. NTPC 1.5%. Power Grid 1.5%. SBI. So first of the banking names, because banks are looking slightly weak. SBI down about 1%, but Kotak Bank is down about 0.5% too. Watch out for that one. Bajaj Finance is marginally in the green, in the red. So that sums it up. A lot of red, but spread out because the index is just down 0.25%. What's doing well? Cipla, Infi, Grasim. No big winners per se on the Nifty. Maybe the winners are slated at the broader end of the spectrum because the good results are all not in the Nifty today.
Absolutely. Sharper moves on the broader end of the spectrum, even though the indices are trying to find their feet in the first few minutes of trade. Let me just get right away to the stocks that are responding to their results this morning. I'm going to start with Aavas Finance. Not quite results, but CVC has said they're going to acquire 26% stake in Aavas. It was up pre-open. Let's take a look at how it's doing this morning. 6.5% on open. So Aavas Finance stocks in news. I wanted to see how Ola Electric opens this morning after a strong pre-open kind of a move. After on listing date, was up on a 20% circuit, about 5% up this morning as well. A whole list of companies with strong quarterly results. So Inox Wind, Jubilant, Honasa, I mean, Inox Wind, the big winner there. Very, very good quarter for Inox Wind. A little down, a little lower than Bloomberg expectations, at least on the revenue front, but PAT margin, all of that was good. Stock up about 6%. Metropolis, also decent numbers this quarter. Let's see how Metropolis is doing, about 1% up. Bharat Dynamics didn't have a very good quarter. And, in pre-open session, you saw a cut over there, about 8% down as well right now. Remember, this is a stock that has run up massively. And the quarter one numbers just haven't been up to the mark. CE Infosystems and Suvain is another set that we should look at. Results weren't too great. Suvain about 0.5% down. CE Infosystems quarter on quarter looks weak, but the management does say that look at us year on year. Nevertheless, about 1% down. Just Voltas and Aurobindo are the other two that I'll pull up, both with strong numbers. Voltas actually pretty good numbers, 7% up nearly at this point. Aurobindo Pharma also looked decent. Their con call concluded just before markets open. That stock mildly in positive territory. So I would say a lot of impact on results this morning, Samina. You would see some weakness initially in the Adani Group stocks after the Hindenburg report, and I suppose 361 WAM as well.
General sentiment, Tamanna, is not bad at all. So most of the market participants are clearly constructive on the way the markets are. The Nifty 500 is trading lower than the benchmark. It's down about 0.4%. Micro, small and mid-cap index also performing in line with what the index is getting up to. A couple of stocks that stand out beyond the top headliners in terms of earnings, beyond the likes of Bharat Dynamics. Balkrishna Industries also down 8%. They reported numbers, street isn't pleased, the stock gets a thumbs down, 8% cut on the stock. Sun TV, I highlighted that for you. The earnings were disappointing. There's a bit of a weakness on every parameter for Sun TV, on back of which the stock gets knocked out in trade, 7% off on Sun TV. Adani Group companies are seeing some early trade pressure, but they're probably off their day's low point. So you are seeing the buying that's also emerging as soon as market participants are seeing that dip on the counters. Adani Green is down marginally, down 3.5%. Total and Adani Power also trading with a slight downtick in trade. Along with that, you've got KFin Technology down 4%, 361, if I can pull that one up. Let's see, that is also in the midst of the storm in terms of allegations that have been made by Hindenburg. The stock is not doing badly at all. So rubbishing all that has been put out, character assassinating the SEBI chief, and of course, everything else in terms of collateral damage there. Along with that, you've got a few more names that are seeing some movement on the winning side. Voltas is the stock of the morning. Strong earnings, the stock is up 8%. PNC Infratech, Safari Industries did well on Thursday, continues to see an up move today as well. Along with that, Pharma not looking too bad, guys.
Yeah. Jubilant Food too, up about 3%, so doing okay at the start. Actually, so Sony, you mentioned, amidst all the coughing from Samina, she's allowing the Kala Tika. Let's put it that way.
Tough morning.
But yeah, Sony, you mentioned Jubilant Food has been the intraday pick of the morning. What about, and that was up about 3%. The other one which is doing very well today is Voltas. So would you go out and trade Voltas this morning now that it's gone up 7%?
I think Voltas for intraday, perhaps, but, if you look at 1540 is the current level and 1520 is a good support. So in case 1520, for only risk takers, somebody who's willing to trade on intraday basis, 1520 can be the stop loss to follow on a strict basis. And on the higher side, 1556 to 1562 is the intraday range where it can retest and, one can just book profits. Positional stock is definitely good, but with the 1500 as a good support. So I think positionally one can continue to hold, and on a higher side, for a short-term positional play, one can look forward to 1600, 1620 also as a target.
Okay, so that's on Voltas, the big stock mover of the morning. Inox Wind is up 5%, Kush. Very expensive stock, but very good results. It's run up quite a bit as well. Would you take money off the table?
For sure. There are early signs of, topping out. We're seeing some sort of profit booking also, although it's a little too early in the day, but we're seeing some profit booking also. But yes, you might want to take some money off the table, re-enter close to those 175 levels.
Sony, very quickly, Bharat Dynamics, Sun TV and Balkrishna are all down 7%. Do you think there may be merit in buying these stocks right now, betting on a recovery over the next 2 to 3 days? Because we usually get through earnings reaction pretty much in a day's time.
Samina, when it comes to Sun TV, it's a clear avoid. The stock has fairly moved up from 800 to 900 plus levels, and this could also be just a reaction along to the results. It could also be a profit booking, which is happening on a healthy note. So I think just wait it out till 820, 810 levels gets tested, and maybe from those levels, one can reinitiate along. But as of now, at current levels, it's a no. When we come to Bharat Dynamics, although the stock is looking quite strong on a positional basis, for a positional play, one can look forward to accumulating at this level because it's almost near to the 200 EMA, which is a good support, and the level is around 1090. So I think one can continue to accumulate anywhere close to a dip towards 1200. That level can be accumulated. On a higher side, 1440, 1500 zone is the level which it can test.
Okay, so Bharat Dynamics having a tough morning. Kush, let's talk about what we can pick in this market, which is giving some opportunities right now. I wouldn't quite say that the markets are weak, just a bare amount of a dip on the Nifty. And remember, this is a market where investors are hunting for opportunities. I just want to look at what's happening in the broader markets as well. Do you see those opportunities anywhere? In what stocks you can pick?
Sure. I think what's encouraging is that in the last couple of minutes, at least, we've seen that initial dip, that, that BTST pressure that comes about, whoever's carried that trade on Friday, perhaps might be booking, and, that pressure is waning off, and, the indices have rebounded from, slightly lower levels that we saw in this morning. As far as pockets of buying go, Kirloskar Oil Engines, this is one stock that we've discussed time and again, had lost some flavor in the sense that, has seen a sharp round of profit booking, but is now starting to turn a corner around, once again. It's moved past its 20-day moving average. I think from a positional standpoint, 1400, the recent highs that it had touched, is perhaps a very realistic kind of a number to look at. On the downside, you're looking at 1155 kind of a stop loss. So the risk reward ratio is also fairly favorable there. I think this one's turning a corner and should be, on your radar.
Okay. Well, metals are off today. Volatility is come up about 6% higher for India VIX. So that's to be borne in mind as well, that there is a bit of an uptick out there too. But real estate seems to be doing okay. So bear that index in mind individually, because that's up about 0.5% in the session today. So that's to be certainly kept in mind. But thanks so much, Kush, and for joining, and Sony for giving us your calls as well. We'll monitor Jubilant FoodWorks very, very closely, Samina.
Indeed, and usually I think Sony also keeps updates going in terms of trading calls that she gives out and closures on that. But over to MK Conference 2024. Nirav Seth, CEO of Institutional Equities at MK Global Financial Services, joins in to talk to us about the markets and all about that conference. Nirav, before I go into your view and reaction to what happened over the weekend, where do you see the markets, why don't you tell us about this conference that you're hosting, the MK Confluence 2024? Share some insight, companies that are going to be present, what is the mood and the feelings?
Well, if I have to sum up, in one line, it's a mini representation of India's GDP. So, you got close to about 210 companies over the next 3 days, some 720 individual registrations, 300 and more houses, and close to 9,000 meetings. So, I'm assuming that by the time you end the conference, you'll have a snapshot of what is happening in Indian economies. It's got representation from across the sectors, from infrastructure to consumption to manufacturing to retail, and a very, very strong lineup of main track sessions. We've got Mr. Sagar Adani, we've got Mr. Ashish Bharatram from SRF, we've got Mr. Anup Bagchi. So very excited and looking forward to it. And I'm assuming that when we are done and dusted, we'll be far more optimistic than what we are today.
Nirav, you are in the same business in some ways to what else is happening in the world in regard to Hindenburg and those false allegations where they tried to do character assassination of the highest share of the SEBI. This has been, of course, shut down from industry leaders to market participants. But your quick reaction of how you feel and what your thoughts are?
Well, I had a very broad brush at the level of allegations that came out. I'm certainly not a forensic, expert, but I just sense that, it is so frivolous. I would like to believe that, more than India or more than our top chair of, regulatory body, I think this is going to be the downfall of people who made these accusations. Markets are very efficient. They'll see through if you've done some good work or whether it is very frivolous in nature. And I don't think that, I don't expect any reaction at all from the markets. I think it will have a natural death.
So right now, Nirav, hi, good morning, Tamanna here. And, this is a sentiment that is echoed by a whole host of market participants that we've spoken to, that the allegations are frivolous, etc. Having said that, the average investor would perhaps be seeing this with some nervousness, be concerned. They'll see some stocks getting hit negatively. What would be your advice for them?
Well, I would advise, the retail investors that we should have full faith in the institutions that we have nurtured. As a matter of fact, I would like to argue that our setup, our check and balances of Indian institutions are far, far more robust than what we have seen in even developed economies, right? So, and that speaks volumes in terms of how we have handled whether it's RBI, whether it's SEBI, whether it is the fintech regulators. We are generally ahead of the curve, and therefore I don't think that the retail investors, should give too much of importance to, some remote research outfit sitting outside the country and making some allegations. And I think that I think we should not underestimate, the aggregate intelligence of the market and the retail investors. They are very, very smart. Let me tell you that.
I think that's the point that Niraj Shah has made enough times. The aggregate intelligence of Mr. Market and what it brings to the table. Nirav, good morning, Niraj here. Tell us a bit about, you mentioned that this conference is about kind of representing India and India's GDP. What's the central theme? Is it manufacturing-led growth? Is it newer sectors taking center stage? What is it that is the larger proportion of the corporate presence there? And what is it that investors have asked you the most when it comes to you trying and getting the set of companies out here? I would love to know, where is the aggregate interest of the buy side according to you?
Well, it's Niraj, it's very difficult to try and segregate the level of interest. To me, and I genuinely believe this, India is no more an economy which is driven by a set of sectors, right? So, and I've made this point a couple of times that one of the larger themes that we can always talk about is the democratization of the earnings, which means that the growth is being redistributed to a large number of participants away from large caps only, which means that, this is true for exports, this is true for, manufacturing, infrastructure, you want to call it PLI templates, how we are trying to insource. So what we have done is that we've picked up companies across these various themes, and obviously we are, I just mentioned that the number of meetings that we are doing tells you the level of interest that is there. So I would not call out a particular theme. To me, this is India's story to a large extent. If you are willing to look for it, if you are keeping your eyes open, I think there are very, very strong investable ideas.
Nirav, okay, let me try and understand this. I'm asking a daddy to choose between kids, but be that as it may, I've asked this question to you every time. There are a lot of themes that are present in your conference. Where is it that you, as a house, you guys are predicting the highest quantum of earnings growth or return possibilities, as the case may be, as a sector. I'm not asking about specific companies, but as a sector. Which are the themes that you're looking forward to hear the most? I know you want to listen to everything, but that's not humanly possible. So where is it that you have the most interest as a house?
Well, so, one thing is obvious that if you actually look at, where you got very, very strong earnings momentum are the companies where you can predict over the next 3 or 5 years. I'm not talking about valuations. So then you want to look at order books, and therefore you want to look at companies that are there in the utilities chain, in the power chain, in the defense chain, in the railway sectors. By nature, because you've got order book which is multiple times of your executionable capacity right now, it gives you a strong level of earning visibility. And I also believe that unlike in developed economies where you see a lot of these sectors don't make good ROEs, in Indian case, right, in Indian ecosystem, a lot of these companies are making very strong ROE simply because of the fact that a part of that probably could be subsidized by government of India, in a sense to try and ensure that, you're trying to ensure, a rapid build-up in manufacturing ecosystem in the country. So those are markets for you, Niraj, that, when you got very strong earning visibility and a great confidence in the earnings evolution over the next several years, markets will discount that, and therefore you have to pay a high PO for that. There are no easy answers in terms of, what is the exact amount of risk you are carrying over here. But I'm generally of the view that if you try and approach these companies as a portfolio, over a period of time, you will do well.
Okay. Nirav, the other question is, there is a clutch of, the divide always there, but now the divide is narrowed a bit. Not that every expensive stock is doing well, but some of the expensive names. In consumption, we saw Trent come out with the fabulous numbers. In capital goods or automation, we saw ABB come out with some very good numbers. Cummins come out with some very good numbers. Some of the wind energy stocks are doing very well. Power stocks continue to do well. Where within the expensive names do you find favor? Now I'm going away from the conference alone and asking you, where is it in the punchier valuation names? Do you guys have the comfort of earnings growth and thereby would recommend that it's okay to stay invested?
Yeah, so by and large, I'm of the view that, the sectors that you specifically mentioned, for example, let's talk about renewables or let's talk about utilities. Usually, these are deep cyclicals, and which is why people are slightly worried about trying to buy something at a premium, because that's the nature of the business that, you could be behind the curve in terms of anticipating where the cycle is. I am strongly of the view that what seems cyclical right now could be a long-term structural story. So if we are on the same page on this investment hypothesis, then we are likely to see an extended period of earnings growth rate, about teen earnings growth rate, and therefore we are better off trying to buy these companies despite their valuations. I've been very vocal about this even when I speak to my clients and all, that the only way you can cut the risk by buying this kind of stories because of the valuations is you cut down the size of the bet. So maybe you are investing 100 basis points, 150 basis points, even 50 basis points. At a portfolio level, I think we should do better. That is the best guess I've got right now.
Nirav, just wanted to get your sense on what the quarter has shown us. So most of the results are out. Time for a fair enough assessment of quarter one. And it seems to be a bit of a mixed bag. Some companies, of course, completely powered. Some spaces, defense, etc., railways have been a little underwhelming. And then these are stocks that have really, really run up. What has been your assessment?
Yeah, you're so very right. So it's sort of a mixed bag. If I'm not mistaken, even at Nifty level, I think the earnings growth is just about, somewhere in the region of about 6 or 7%, which is fine. So, I'm of the view that it's unlikely that you will have the same level of momentum throughout the quarters. We also need to keep in mind that a lot of this, you mentioned some of these heavyweights, infra companies, railway companies, they move both on, what is the visibility on the order book and the execution that's happening on the order book. So obviously you've got an election-led slowdown. You also had, very, very serious heat wave, and therefore, it tends to impact, your volume outlook and stuff like that. Am I seeing something which sort of looks like toppish to me? Unlikely. So I try and look at what are my leading indicators. So look at the PMI numbers, right? The PMI for services for, I think, for the month of July, upward of 60. So which is very, very strong expansion, right? The inflation numbers are moderating. Just keep the food inflation out. Your core inflation is less than about, I think, in the region of about 3.6%. Credit growth is holding up. To me, I believe that at a right point of time, RBI should be able to reflect the economy, assuming that there is some sort of slowdown, because our macros are in very good shape. You've got Fed, which is close to cutting the rates. So nothing on, there's nothing on the horizon that tells me that, I need to be overly worried. And let me make a very important point. We always often make a mistake of trying to look at earnings right now and trying to figure out what the markets are doing. Number one, markets are forward looking. Secondly, most importantly, you need to reassess whether the markets are getting re-rated, because that is a period of time that makes you very, very nervous, because, there's nothing that you can attribute to the surge in the markets, and the P's are going up. And probably it's only in hindsight that we'll figure out why the markets are getting re-rated. So I'm open to that idea.
Okay. In terms of sectors right now, Nirav, with all the information that we have, looking at quarter one, looking at what you're expecting in the rest of the financial year, would you say that the viewpoint has shifted? You will see some rotational play here. Are you liking, for example, consumption? Are you liking some of these stories which were not as well loved over the last several quarters?
Well, my strategist has a view which talks about, some sort of tactical movement into the so-called defensive names. I personally have a slightly different view around consumption. I believe that a lot of these companies, the valuations are significantly ahead. If you look at the net margins over the last decade, they have doubled. In some of the cases, the slowdown that you are seeing, you can actually attribute to very, very strong price increases that these companies have taken the last 2 years. So I think that is mean reverting, right? So I don't necessarily see a slowdown in that context. It is a strategic call these guys have taken to try and maximize profits over revenue, and to that extent will come back. Now, are these the ideas that I want to bet over the next 3 or 5 years? Probably not. I am looking at where is the India deficient, where is the capital chasing, what are the new sectors coming up. Those are the stories that I would be more bullish on.
All right. Thank you so much, Nirav, for speaking with us. And of course, you'll see a lot more from the MK Confluence on NDTV Profit all through today and tomorrow. But before we take a very short break, the big story we're covering this morning is, of course, Hindenburg's hit job. Let's hear what former Attorney General Mukul Rohatgi has said.
Hindenburg as an entity has no credibility at all. We have seen their first attack more than a year ago. The idea is to create a sensation, create instability in the stock market, create a volatile situation, and then try and make a profit out of that by short selling, etc. And that is their avowed object. They picked on the Adani group. I had an occasion to see all their charges because I was involved in that case. The matter went to the Supreme Court. The authorities looked into it and ultimately found nothing, and that case was disposed of. Now, I find that there is a concerted attack on the same group. and now they have roped in the SEBI chief. I think it completely lacks credulity and credibility.
Back with India Market Open right here on NDTV Profit, and a few stocks that should be marked by virtue of the price moves that they have made. So certainly Suzlon and Anox will feature in that list. As a pack, both of them have done very well. IWEL2 is up, so watch out for these three. It's been a meteoric rise for Suzlon, I'm sure, like I'm telling you, but it's just something to mark. Astral is down 4%, so watch out for that one. There is weakness in Sun TV, Bharat Dynamics and Balkrishna in that order. Adani Total Gas is down about 5% as well. Adani Power is down about 4%. So these are amongst the top losers. Surprise loser to my mind is Honasa, which is down about 4% in trade. So watch out for that one too. Okay, more newsmakers. Let's see what ABB is up to, because that's the other stock we should mark. It had a very strong quarter, but I reckon by virtue of the fact that it's an expensive stock, a bit tempered despite brokerage calls that have come out. Now, I had the pleasure of going to the ABB plant at Neelamangala in the Bangalore district, which is the automation plant, and talked to Sanjeev about what happened in quarter one and what the outlook ahead could be like as well. He had out a very small slice of that conversation.
So, as you know, in India, we have 25 factories. So, we are in one of them, which is the robotics automation shop floor. And here you will see different solutions being configured by our teams, which will go to our customers.
All right. I'm waiting to hear that full conversation, Niraj, and your experience of going to the ABB plant in Bengaluru.
Yeah, fascinating because what they are doing on the machining front. And Tamanna, when the viewers watch this show, they will see some of the high precision machines that they have made. And what they do, there was a machine which has got a needle, and 4 glasses sat out there, and the machine does very high speed zigzag movement around those glasses without touching them even once, repeatedly. So they are just exemplifying what precision could be, and exemplifying what sealants and sealing could be. In some sense, some of these manufacturing practices that are happening in India are eye-opening. Quite stunning, really, what's happening.
Yeah,
there.
no, and fascinating to go and actually see on ground how these companies work. I mean, we sit and talk about them day in and day out. We talk about their financials, but to actually see it on ground is very interesting. Watch out for that conversation that Niraj has had with the team of ABB, definitely. We have another big conversation coming up in just a second from now. But before that, just a view on what's happening in the markets right now. And what I find interesting, Niraj, is the clear response to numbers. By the way, in terms of recovery, RVNL is having a bit of a recovery. Their numbers for this quarter weren't great. The stock had got hammered a fair bit. But RVNL up about 5.5%. Rail Vikas Nigam is what I'm talking about. On the other hand, Aavas Finance has continued to be one of the top winners this morning. Boltas from the back of numbers. We've spoken a fair bit about it. PNC Infra is the other one. PNC Infra has actually had quite a good quarter. Very strong quarter for that company. It's come off its highs of the day. Honasa is the other one which has seen a complete reverse. The quarter is actually not that bad. The stock opened up about 4 to 5%, but has seen a complete bout of profit booking since then. The others I would mark is Suven Pharma. Suven Pharma had a tough quarter, but the thing is that the management guided to that tough quarter. It was very clear that this would be a tough quarter. They had said that in advance. So you have seen Suven Pharma not doing that badly.
Yeah, surprise. So Honasa is a surprise, Suven is a surprise, and the market reaction has hardly been a surprise today. So no big gyrations. And let's get in Mr. Madhusudan Kela. Okay, I think we'll get to him in just moments from now. I think that line is playing tricks with us. But you know, the reason why we're so interested in talking to Madhu Kela is that his belief in the India story is so strong. It'll be lovely to understand from him what he thinks about things like this, which are now happening with a fair degree of recurrence. And of course, it loses its sting relative to what it had in January 2023. So he's with us, founder of MK Ventures. Mr. Kela, great having you. Thank you for taking the time out. And I would love to understand what your thoughts are about this whole quote-unquote hit job, because the market seems to have shrugged it off almost absolutely.
Yeah. Hi, Niraj. Good morning, and nice to be here again with you. So, see, over the weekend, I myself personally went through the report and also went through all the clarifications which are being issued by various parties. To be honest with you, Niraj, I can't really find anything of any substance in the report. All the allegations and the responses which have come, they make it absolutely clear that it really looks like there is some larger purpose to this report, and it is really maligning the image of someone who has so immensely contributed to Indian capital market in various roles in last few years. And there's absolutely nothing. If you have invested into certain funds because of advice of certain close friend of yours, and you redeem the fund as soon as the friend left out, I can't really find out what is wrong in all of this.
Madhu, very good morning. Tamanna here.
Mind you,
yeah. No, please continue.
Hi,
your
Tamanna.
point.
Hi, good morning.
Please continue your point.
No, I'm saying see that the point is that investment in the fund had nothing to do with the group stocks. That the fund did not invest into bond or equity of any of the group companies. So where is the link? I am not able to understand that.
No, I just wanted to get your perspective, Madhu, on why do you think this has come about right now? And we've been making this point about conflict of interest. Through these smokes and mirror, what Hindenburg is trying to tell anyone who invests in Indian markets is that you cannot trust the system. You cannot trust SEBI, you cannot trust the SEBI chair, you cannot trust them to protect your rights as investors. That's the core message they're trying to put forward and saying that there's a conflict of interest. But if you reverse it and see, isn't it a conflict of interest for Hindenburg? Because they're supposed to answer some questions. And instead of doing that, they're doing this. My question is that why this attempt to shake the faith of investors?
That is why I'm saying it looks like a real attack. It is not about one individual, or it is not about one corporate house. It looks more an attack on the country. And they are trying to really malign and basically malign the image of the whole country. And your point is right. And who are they to say that you can't trust the system? I think we are one of the finest and the best regulators in the world. Both RBI and SEBI over the years have done such fantastic job. And the other point is that, the allegation which you are putting, that is putting their own credibility at stake now. Because Tamanna, if you see the report very carefully, there is nothing substantial with their even alleging. I think the points are being made for the sake of it. So it looks like to me, it looks like a larger conspiracy at some different level and at a country level. It's nothing to do with an individual. As you rightly said, they are being issued show cause notice. So rather than applying to that show cause notice, now we are putting an allegation on the regulator itself.
Okay.
And that too on an individual whose image has been spanky clean for the last 30 years.
Exactly. So, there is obviously, we are a democracy, we have all kinds of voices today, and people watching will be wondering, okay, how do I know that, these comments that I'm seeing right now, are they unbiased, are they fair, are they in the interest of investors? Because we live in that kind of a world, Madhu, where everything is so polarized. I want to ask you very, very clearly that as per the allegations, and you said you spent all weekend reading what Hindenburg has said, what Madhvi Puri Butch and Dhaval Butch have said, what SEBI has said, what AMFI has said, what Blackstone has said, what 361 WAM has said. Is there an iota of concern which needs to be investigated at this point in your mind? Something that we need to check out to be above board?
I will be very clear, very vocal. I will not mince any word. To my mind, and I've been in the market for more than 33 years, right? To my mind, it is crystal clear, and there is nothing which has, you investigate when you are in doubt. I can't understand where is the doubt. And what do we need to investigate? If you are a private individual, and if you invested money in a fund, right, when you were a private individual, and you redeemed the fund as soon as the basis on which you made the investment, came out. So what is there to investigate? I think that the real serious issue would have been if the fund had invested, if the money was invested at that point of time, and the money directly would have been invested in the group stocks, and they were continuing even till now. Then one can understand there could be some link. But whatsoever, I think the fund was redeemed in 2018, it was invested in 2015, and that fund had nothing to do with the Adani group of companies. They did not invest in Adani group stocks, neither they invested in Adani group bonds. So that is point number one. The other allegation which they made is Mr. Dhaval is working with Blackstone. Now he has a clear expertise in the supply chain and logistics area, and as a professional, if he is working for a professional company, what is wrong in that? And where is the link between the two? He has nothing to do with the real estate business of Blackstone.
That's true. That's true. And when REITs have been such a fantastic
and the third
instrument. Sorry, yeah, please continue.
She is running some.
Please continue.
Yeah, the third allegation is that she's running, the chairperson is running some private company and she is doing consulting. Again, she has made it very, very clear that as soon as she got into SEBI, she has relinquished all of that, and those companies have become dormant companies. And if she was not in SEBI, what is wrong in giving consultancy to someone else? So to me, Niraj, it looks completely malicious, and it looks like an attack on the country rather than an individual. To question the basic credibility of a regulator in a country like India, wherein the regulator has done and demonstrated such a fantastic job, and she has demonstrated such a phenomenal career over the last 30 years. I think it looks, as I once again repeat, it looks larger than what we all of us can see, and it is part of some real conspiracy, and it looks like a desperate attempt to malign the image of an individual.
Got it. Yeah, most certainly, and maybe time for therefore people to stand behind that individual as well, who's done such a fabulous work for the capital markets. My question, though, Mr. Kela, is this: that the average viewer on the street who looks up to opinion from people like you must be wondering that if Mr. Kela is saying that this is a part of a larger conspiracy, can it have a larger than currently noticeable impact on Indian risk assets, particularly equity markets? What's your sense? We've seen this tape play out before, wherein the impact was fairly large. Do you believe this time is different?
Now, I don't think so it will have that kind of an impact, Niraj, to best of my understanding and knowledge of the market. And I don't think investors need to worry because of this incident that markets will destabilize or it will have some significant correction and all. Not because of this. Tomorrow morning something else may happen in the markets, and that may take its own course. But because of this, I don't think, it will, obviously the noises will generally last for a few days. But I can't see any substance in all of these allegations, specifically after reading the clarification issued by various parties that Tamanna very rightly pointed out. I can't see anything substantial that which will destabilize the markets or will cause any significant corrections.
Last question, Mr. Kela, and this is because so many people who invest in the Indian markets look up to you and your philosophy in the markets. What is your message for investors right now who obviously have the faith in the markets but want to make sure that that faith won't be shaken?
Yeah, the message is very clear, Tamanna. It is basically believe in the country. It is believe in the growth prospect of India, which is going to play out over next 1 or 2 decades, right? And these kind of instances should not cause any doubt or fear in investors' mind. Rather, they should use this as an opportunity to buy or to build whatever they want to build. Having said this, I would say certainly one thing, that we have seen significant gains in the markets over the last 3 years, and they have been significantly above the average gains which are being made in the last 25 years. So people must not extrapolate the kind of returns which you made in last 3-4 years in individual companies or market by and large. So when you are getting into the market today, you should have moderate expectation that ultimately this is an asset class and it will only deliver returns to the extent of earning, and it can't just on the basis of PE multiple re-rating, you can't just keep getting 30-35% return every year. So that is the thing which you must keep in mind, that it is an asset class. You must stick to your overall portfolio allocation into various asset classes and invest into India with a medium to long-term perspective. And as you have made money in last 20 years, I think there is still a lot of India story to go, and there will be a lot more money which will get made in the long run in investing in India, and specifically in equities.
Yeah. I think this is such a great message. Believe in the India story. Keep your return expectations logical, because what's happened in the past need not happen in the future. But if you have faith in the India story, there's a lot of money to be made if you invest logically. Mr. Madhusudan Kela, such a pleasure to have you, and such an important day to have your view on what's happened. So thank you so much for your time.
Thank you so much. Thank you so much, Niraj. Thank you so much.
That's an important market voice. Laying it out as he sees it. It's a large institutional voice as well, by the way. MK Ventures and Singularity AMC by themselves. So, but we continue this conversation, this set of conversations on the other side. It's a wrap on India Market Open on the note that the markets are down about 0.5%. But we'll talk more about this and more with our experts who join us on Talking Point. Stay tuned. Thanks for tuning into Talking Point. I'm your host Niraj Shah. With me is Tamanna Inamdar, and we are going to be doing a 22-minute conversation with two experts on what they feel is the current state of the markets, with the cries around valuation being now there for a while, and a few recent developments, notably the Hindenburg note as well. So all of that forms a part of our first set of questions to Nandik Malik. He's CIO of Avendus Capital Alternate Strategies. Nandik, so good having you. Thanks for taking the time out.
Thank you so much, Niraj.
So, have you been concerned about market valuations in the recent past, and did Q1 did enough to kind of, if not allay those concerns, if you had them in the first place, but to at least live up to its billing?
No, I'm not so much concerned. I think our markets have been behaving very well. In fact, if you look at how the markets have behaved, we have become low beta. So previously what used to happen was global would be down 5%, we would be down 7%, global up 2%, we are up 4%. Now what's happened is global is down 10%, we are down 3 or 4%. On the way up also global is up 5%, we are up let's say 2 or 3%. So that's why I don't think, let's say even if valuations are high, I don't think that's a cause of concern, because markets in general have become low beta. And people who have made wealth in the last 2 or 3 years have actually made wealth by holding on to the portfolio for long. So in that case, I think the high valuation concern is a lesser issue as of now. Things like, people putting money consistently in SIPs and funds, I think those things are more important. And one important factor which people have ignored is how rupee has behaved. So in the last week, you talked about the carry trade, JPY moving from 160 to 140, going back again. I don't remember when rupee has moved from 83 to 85 band. I don't remember last time it happened. So rupee has been fairly stable, which shows that possibly from a macro perspective, we are fine. Markets, earnings will keep coming, going, but we are a growing economy. we are still not exactly developed markets, but I think we are not in that EM phase as well.
EM phase as well, yeah. But are we looking, I mean, let's assume that last week was a turbulent one because of the whole JPY thing, so on and so forth. Are we looking at calmer seas ahead because we are 1 week closer to a Fed event? JPY will not now react as much as they did because of the BOJ government doing what they've done. And the fears of that hard landing in the US seems to have ebbed a little bit. So are we looking at calmer times ahead?
Yes, I would think so. More so because Fed has indicated that the rate cut is around the corner. Now, from this stance, I don't see at least a rate hike happening. So the only two possible scenarios are either status quo with a lower probability or possibly a 25 or a 50 basis points cut. I don't think we should be concerned because RBI, in my view, is in no hurry to follow Fed. I think RBI for the time being would be more concerned on the gap between what our rates are. And historically, they have been much higher. So whatever little talk people do about RBI following the Fed, I think it's a long way down the line. RBI would be very happy to let the rate gap increase. Even then, they would be much lower than what the historical numbers are. And I would want to say RBI has done a wonderful job at controlling, or let's say, seeing how rupee has been panning out.
Yeah, in fact, after the last policy, most assessments have seen the first rate cut move from Feb to October. But the RBI governor was very clear that food inflation is bothering him. So he's in no rush. Nandik, I have to talk to you about the big topic this weekend, and we've been seeing how markets have reacted. I think when that first set of tweets came out, big thing coming India, sort of from Hindenburg, everyone was wondering, oh no, what's going to happen now? What happens to our investments? What happens to markets? Fair to say that markets have ignored something which showed no credibility.
So markets haven't ignored it 100%. The next time this happens, market will ignore it 100%. So the last time this happened, if you remember, the reaction was much more steeper on the way down. This time the reaction has been a bit more mild. So markets haven't completely discounted it. Markets have reacted to it. But the more this happens and the more consistently they keeps happening on a regular basis, then at a point of time market will not even talk about it. So for example, the media channels are now discussing about it first thing in the morning. 2 or 3 more sessions like this, and people will not talk about this only. You may remember after the exit polls and after the elections, there was talk about how exit polls were rigged and short sellers made money. But even from those levels, Nifty is higher now. So the more these kind of things happen, I think it's good for markets because our market participation is fairly deep, and this tends to show that everything is in order. So the more these kind of things come, it's actually good for the long-term stability.
But in that, having said that, let's look specifically at what the allegations are, what the responses have been. Because for us to just shrug off and say, okay, markets are deep, that's fine. But this time round, especially, Hindenburg seemed like they were grasping at something or the other.
I think we should have an interview in which we should interview you because you have put the points perfectly. So I would not want to say it in black and white so much, but it's evident as to what's happening, and that is the reason possibly why even equity markets haven't reacted so badly. And the research which they have done seems to be fairly on the poorer side. The kind of arguments which they have given, the kind of data points which they have pointed out. So again, it's a good thing that these things are coming because this just shows how fair and how resilient the markets are.
Yeah. So what happens next, Nandik? What's your sense? Let's assume there is an event like this which has brought the market down a little. Maybe it brings the market down low along with what's happening to global markets. Who knows, right? But let's assume for whatever reason the markets were to correct a little bit, 1-2% or what have you. Because we are closer to that event and because we are saying that this is worse per se a non-event, are you a buyer? I mean, were you sitting on a bit of cash around elections? Have you deployed all of that already, or are you in the process of deploying it? Are you a buyer currently? What are you doing?
See, if you look at the data on the 3rd or 4th of June, when there was a sharp crash, and then there was a bounce after that, I was surprised that most of the buying was done by the retail / that segment. So it seems there are people with a good amount of cash ready with them, and it looks as if status quo, if nothing happens on the global front, then at least major dip would be bought into.
No, let me try and ask you, reverse this. Sorry, just one follow-up there is this, that we are closer to the Fed rate cut. Typically a Fed rate cut, and since COVID lows, the Fed has moved the market more than anything else.
Correct.
We are closer to the Fed event. If you will, we'll probably, I mean, good hypothesis that September we'll see a rate cut. Domestic mutual funds are sitting on over 1 lakh crores of cash.
Yes.
So is it prudent to think that there is a higher probability of an upside on the markets over the next 3 months versus a downside?
Yes, I would tend to agree with that assessment.
Okay.
More so if nothing happens on the global front, because people are focusing on the Fed part, but I think a more important event is the US elections.
Okay.
And the front runner at this stage has been a president in the past, and typically that gentleman has been more market friendly. So together, the Fed event together with the probability of that event panning out, I think the chance of an up move is higher. Valuations are high, you are correct, but then I would still assign the chance of an up move to be higher.
So let me reverse that question. If Kamala wins and Trump doesn't, would that be seen as a negative for Indian markets?
At this point of time, I think it would be bad for global markets, at least US markets is what my assessment is. But again, we are low beta. So very surprisingly, we have become low beta. We definitely should not fall as much as what US does.
Okay. Yes. I take that point of being low beta. One thing that we are quite sensitive and reactive to specifically on individual companies and stocks are earnings. And typically in a market like this, earnings take center stage. We're pretty much done with Q1. What has been your assessment?
Not very great, to be very honest. But I think earnings in the present setup would be secondary, because if rates start coming off, that funding pressure would ease. So a lot of, even if let's say the earnings are going off by a few basis points here and there, would be more than compensated from the funding pressure, the release which corporates would get.
In terms of what has, the good, bad and ugly, overall you're saying they haven't been that great. What has been the standout in terms of this was a miss? Can I pick up financials? Because the commentary has been consistently that deposit growth is a problem. There seems to be no change on the horizon which would, clear up that picture.
See, my view is, and I've shared it multiple times, is that, there are some tax arbitrages between various options available to investors. So my favorite example is arbitrage funds, which get classified as equity taxation, but for all purpose they are debt funds, but they get taxed at very low rates. So till the time you have these kind of imbalances, the dice would be loaded a bit against the deposit sides. But I think deposits are a cause of concern in banks. But again, it's easier to address. For example, addressing these imbalances are fairly on, but they have to come from the authorities. So it's not something which is in the hands of the banks. But yes.
On lower net interest margins, raise your deposit rates.
Yeah, but then raising deposit rates also has other implications, no? Yeah.
No, but so then to answer the question from an investing perspective, are banks a good shoe-in or no? You like banks, other places?
No, banks. I'm a bit more positive on this because they have underperformed so much in the recent past.
Okay.
And it's not that banks are lightweight in the Nifty index. 35-40%, if anywhere between 35 to 40% of the weight is banks, and the index has to move. See, I think most of the people who invest in banks are long-term investors. They typically don't like to invest in banks for 3 or 4 months.
Or foreign investors who have been MIA for a large part of this year.
Yes. So, and then there is talk about relaxing the cap on foreign holdings as well. So, these things happen, then you never know. Because the regulators won't, announce in advance that something like this is around the corner. So because I think it's a good time for sector rotations, and sectors which have done bad, let's say in recent past, status quo should do well. So banks fall in that category.
Just on that question of foreign investors coming in or global money coming in, do you see that changing post the 2 events we've been talking about, the rate cut expected in September and then the US elections?
I think we are past that stage where now foreign investors decide which side Nifty is going. I think it's turned a complete circle where domestic investors, domestic fund flow, domestic sentiment primarily drives. Foreign sentiment is important, but then it's not what it used to be 10-15 years back. So I think the local sentiment is strong, and what seems to be a recurring theme is buy on dips. What can interestingly happen is in many of these passive funds, and now they are growing in size. So what they do is they allocate to different geographies and countries. And typically they have a fixed formula. It can be by GDP, it can be by population, whatever. In each and every factor, I see India's weight increasing only. So, we may come to a stage where, irrespective of valuations, because of the demographic advantage or let's say other advantages which India has, that allocation will only keep on increasing.
Got it. Okay. Nandik, stay on. We need to slip into a very quick break. Come back, continue your conversation with Nandik Malik. Also get in Abhay Agarwal of Piper Serica. Stay tuned, viewers. We'll be right back.
It's been an interesting Monday morning. Started with a lot of anticipation of how markets would open, and markets have actually been pretty steady, even though there were lots of attempts to shake investor mood over the weekend. Abhay Agarwal, founder of Piper Serica, joining me now on the show for his perspective. Abhay, very good morning, and we'll talk markets, we'll talk direction, but wanted to know what you made of all of the events over the weekend, round 2 of Hindenburg hit job allegations, and then the responses to it.
Yeah, Tamanna, good morning, and thank you for having me on the show. Yeah, for me, frankly, as I've been saying, it's a non-event. I think it's done by an organization that is known for this kind of activity. As an investor, I pay no attention to these kind of, mudslinging allegations with, very selective facts or some data being thrown in. I saw the report that they put out. I mean, frankly, that kind of stuff would be done by, a graduate level analyst in a firm like ours to dig up that data. There's nothing credible in it. I mean, it's just a bunch of facts. I
have to ask you, if an analyst came to you with that data and claimed that this is good enough to put in a report, would they get fired?
They would definitely not get a job with us or anybody else, not only us. I mean, what is it? You Google something, you find something, and then you put it out and say, selectively, because I'm sure they found something else, but they selectively chose to use this data, which shows nothing. I mean, there is nothing material in it. So I don't even know why there is even this interest on social media. Maybe it will stay for a couple of days, it will die out. But it's a non-event. I mean, it doesn't matter. I think the only intent of Hindenburg probably is to make some money off it, which if they fail to do, everybody will lose interest. So I think, but at the same time, I think since this has been put out, and so much discussion is taking place, especially for a very, very credible position of SEBI chairperson, I think it is also the onus is on the Indian government to take note of this and to make sure these things don't happen, that people just don't make allegations from overseas and have no repercussions around it. They have the legal forum they can go to if they have a problem, but putting it out in the media, there's only one intent, which is to mudsling and benefit monetarily from it. And I think once both these efforts fail, hopefully this will stop. But I think my worry is that as the Indian market grows and we attract more and more foreign capital, some of these attacks will continue from different directions. It is not for me to say how the government should react to it, but definitely there's some mechanism that should be put in place, especially to protect the small investors, who may worry more about the markets after reading this.
Yeah, most certainly. I love those answers. They kind of echo what Nandik Malik was telling us. He's with us in the show as well. Just one follow-up there. A set of people that I spoke to overnight said that, in the remote chance that the markets were to react to this or any other event, they would be happy because they'll get a chance to buy at better valuations and lower levels. If that were to be the case, depending on what kind of cash you're sitting in, would you use dips to buy currently? Post earnings, post this, but closer to the Fed event, are you a buyer in the markets currently?
Yeah, I have been a buyer on dips for last 6 months, and we have been discussing that. But recently, our thought has changed, and it has nothing to do again with Hindenburg report. Please let me clarify. It has to do more with the on-ground data that we are getting right now, because we do a lot of research with the channels, and we try to regular basis understand the domestic consumption pattern. And we are seeing a remarkable slowdown, much worse than we expected at the retail consumption level for discretionary consumption items. Typically what would happen, Niraj, is by now the channels would be building inventory for the festival season. But that has not happened. And retailers have little retail, the retail shopkeepers and distributors have very limited confidence as of now about festival sales. And I think that is happening because of a couple of reasons. There is a remarkable slowdown in funding options available to the retail borrowers to engage in discretionary consumption. Rates have gone up, money is not as easily available as RBI has tightened the bank lending to NBFCs and to unsecured borrowers by increasing the risk weightages. And I think the impact of that is being seen now with a lag. So lack of credit availability, increase in taxation, it has hurt negatively the sentiment in the budget. I think we look at it from one perspective, from capital markets basis, but I think the deterioration in the consumer confidence because of higher taxes is something that people haven't yet realized. So I think looking at that data and then looking at the fact that we are going into US elections and there are enough geopolitical tensions of all around and they're escalating all over the world, we are not buying the dips right now, Niraj. And I think what we will do is we'll wait for these events to play out, look at the next quarter earnings. So we have increased our cash allocation and we plan to sit on it for the time being, even if we see sharp market corrections.
Okay. Nandik, is that a thought in your mind too, that the festive season may not turn out to be as strong as people usually expect festive seasons to be? Your view could be different than others, of course.
No, so I think that doesn't really matter. Given the amount of money and the quantum of money which is sitting with, let's say, domestic mutual funds and institutions, because at some point of time they will have to invest, right? And it's not that there's a valuation at which level everyone will, come and start buying in. So someone will, try and preempt that, and for some person maybe a 2% correction is good enough. For some fund maybe a 4% correction is good enough. For some funds they are waiting for 10% correction. But if at 2% correction the bigger players come in, then that 10% correction may not come. So even if, let's say, there is some slowdown, given the amount of liquidity which exists in the system, and given that our markets haven't really fallen that much, so many people may think it may or may not be the right thought process, is even if I invest, if the downside is limited, they may as well invest the money now, no? Because if you look at the last 2 or 3 years, 4 years, I don't think Nifty has fallen by more than 10%. The last which I remember is somewhere around 2000, 18 or 19. After that, I don't remember. Markets.
Except for COVID, of course.
Correct.
Which was an unnatural.
Correct.
COVID was an outlier.
Correct. COVID is an outlier. So if people are okay with loss in time value of money, then muted festive season, etc. Yes, conventionally they have historically depressed relevant stocks, but may not matter given the current context.
I think the other big factor, and Abhay, I like your view on this, a lot of commentary that we're seeing from the result season is a lot of consumption-led companies talking about how rural growth is coming back. Without fail, every major FMCG company has talked about rural growth outpacing urban growth. Now, one could argue that it's on a relatively lower base, etc., etc. But do you think that this is one big theme to watch out for over the next few months?
Yes, absolutely. I think we are seeing more government support to rural economy. Money is percolating down, and that's why we were fairly bullish early in the year. Tamanna, if you remember, with you and Niraj, we had a discussion that how we are bullish on the whole agrochemical space. And I think that space is already played out pretty well for us and continuing to play out, because if farmers have more money at their disposal, they like to use part of it for consumption and part of it for increasing their yield from the land that they own or till. So there is definitely robust demand for agrochemical seeds that we are playing out. And I think if farmers have that confidence, then it will lead to higher farm level incomes. And if abundant credit is made available to farmers when they need it 2 times in a year, then I think the rural economy will be in good shape. But again, farmers are not savers. The farmers typically either consume or spend money on their farm. So the problem with rural economy coming back is that you get 1 6-month window when people spend and they buy SUVs and cars and motorcycles, consumer items. But then next 6 months, if they don't get good pricing for their crops, again the cycle turns down for rural economy. So I don't think anybody should build a case to invest purely on the sustaining recovery of the rural economy. It's very cyclical, and the cycles are also pretty short. So that's my caveat to anybody who's looking at the recent recovery in rural consumption to build an investment case around that.
Caveats galore today from Abhay Agarwal, point to be noted. A relatively more constructive Nandik Malik, point to be noted as well. But it's always great to have diverse opinion. Gentlemen, both of you, thank you so much for joining us and giving us your thoughts on today's talking point. Thank you.
Thank you.
All right, and with that, it's a wrap. Thanks so much for tuning in. Up next is the FNO Show.